The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Stock of the day is the gaming company Light & Wonder, cross-platform global games company, focus on content and digital markets with a portfolio of revenue-generating activities, primarily supplying game content and gaming machines. Has missed expectations with its first quarter revenue coming in at $774 million US. That's compared with estimates of $806 million. Still, it was the 16th consecutive quarter of growth for the company, adjusted NPAT rising 11% year on year to $117 million US. Shares did fall in the US after it beat EPS expectations by more than 50% in the fourth quarter. The company anticipating near-term cost pressures stemming from Trump's trade policy, but remaining confident the ongoing efficiency measures will help offset the impact. So, Phil, and before we came on, you said you're a bit mystified by this company and its performance.
I think my words were, I wonder why people want to own this company. It's a good company. It's in the right space, despite the trading update. So every company and their dog that puts out a trading update will talk about Trump, tariffs, uncertainty. In a lot of cases, it's justified. In other cases, they insert this period's excuse for missing guidance. Now, typically, gaming holds up pretty well in a downturn. There is no rational reason to go and gamble unless it's entertainment, because the house always wins. And these guys sell what used to be called one-arm bandits, designed for the user to lose. So it is entertainment. Blaming Trump for that, depending on who you talk to, there has been, and I think Uber put out some announcements overnight that less flights into the US, less people spending. So let's say tourism is down. All right. So you can understand perhaps some weakness, but gaming in itself should be more defensive. But perhaps in the short term, it's volatile like everything else. They just missed guidance, so they just missed analyst forecasts. I think consensus is going for 600 or so new machines, added 497. That's a decent miss. There have been issues in the press about them fighting Aristocrat over, stolen IP or taken IP. That'll get sorted out probably in a non-event. Why do you want to own this stock? Answer is valuation, and it does look cheap, so I'll call it a hold. I think people still consider this as an alternative to Aristocrat. Just buy Aristocrat.
Don't go too far. We're going to mention this a bit later, but anyway.
When you've got a market leader, and I've seen this with Wesfarmers, I've seen this with CBA, people are always looking for the next winner in the sector. When you can currently buy the winner, you often don't need to look elsewhere. Now, valuation is just one thing people look at when making an investment decision, but when there is already a clear winner in the space, you should always start there. Now, you buy the challenger brand if you think it can outperform and take market share, which is not really doing, certainly not on that last release, but it is cheap. So we'll come back to Aristocrat in a second. I'm going to call it a hold because it is cheap, because it is in a defensive sector, that it is worthwhile having some exposure to the space in this market. But it's not a must-own. We'll come to it later. Always look at the market leader first. This is a good business in a good sector that's not expensive, so I'll call it a hold. But it's not my preferred exposure. Is
it sort of is it technologically a little more advanced? It's a little more ambitious, particularly compared with Aristocrat.
Look, it has to be. But if you look at over a medium term, the company that wins the market share, gets the best games in the market, tends to win. And Aristocrat spends a lot on R&D, and others have tried. Ainsworth have tried. They keep winning that battle because of what they spend on R&D and their ability to pick games or to pick the next theme. So, and there's no reason to suggest that they're going to drop the ball. Yeah, they've had some staff turnover. Some people have crossed the floor and gone to Light & Wonder. So it's not that they're going to continue to lose, but Aristocrat isn't going to drop the ball.
Yeah.
So you're kind of relying on Aristocrat to let them in, and I don't think they will. Having said that, Light & Wonder is not priced like it's going to beat Aristocrat. It's going to price like it's going to put some good earnings growth through. So I'll call it a hold, not a sell. But I always start with the market leader, and they're not the market leader.
We own Light & Wonder, so we're one of the ones. We own Aristocrat as well, and we've owned Aristocrat for a long time. But the reason we bought a much smaller stake in Light & Wonder is the feedback we were getting from, I've got 3 clients who own publicans, and two in particular own very large poker machine-driven revenue pubs. And Light & Wonder there is no doubt is taking market share in the Australian market. And 2 to 3 of the key games that have been very successful here are being rolled out into the United States market over the next 12 to 18 months. So for us, it was a bit of a hedge because speaking to these guys, and we have spoken to some others, there is I think a mood out there where people want to see a second competitor. They feel a bit like Aristocrat is overly dominating the market, and there's almost some support amongst clients for a healthy number 2. The US market has historically shown what works here and gains traction tends to work well there. So we could be, and the people, Matt Wilson, who runs Light & Wonder, he was the guy that he was the head of North American sales for years for Aristocrat, and he really drove the success of that business, which he's now trying to do with Light & Wonder. They did just take Aristocrat's CTO as well. So it's pretty full-on tactics in terms of how hard they've rated staff at Aristocrat, but I think it's trading on a PE of like sub 15 times. They've still stuck by this $1.4 billion EBITDA target for 2025. I think the market thought they'd easily jump over that. Maybe they're going to be a bit closer to that now. So why we've seen a bit of a pullback. But for a business that's had 16 consecutive quarters of earnings growth, there's a lot of companies, I would say, more dubious outlooks on a similar PE. So for us, it looks good. It also does have a fair bit of debt, which warrants a lower PE, I think, than Aristocrat, which has got a much stronger balance sheet.
So a buy?
Buy.
Yeah. Okay. Does that answer your question, Phil, as to why you want to be there?
No, that's been the thesis since it's floated, and there's been a lot of interest for that reason.
Yeah.
But I probably would agree with Ben. You own both. You wouldn't. I wouldn't pick Light & Wonder over Aristocrat.
Yeah, I think I completely agree. You've got to be very. The number one would normally always. It's like realestate.com and Domain, and there's countless. A well-run winner in an industry is very hard to overcome. They've got to be well-run though.
That is our stock of the day, Light & Wonder.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.